Yeah, now it's clear.
Oh man, now it's perfect.
Okay, okay. So I will repeat it, okay?
No problem. Yeah,
Or you want?
go.
Okay, so today I bought the trade. So I plan to backtest 1 year data. So my my thought is to um, trade backtest one trade in New York session with which in macro timing. 1 day per trade I have generally in my that group that section.
Hmm.
So that I plan it.
So you want me to backtest, yeah?
No, I have some questions. So I will ask you that question,
Yeah.
and you will answer me. I have written in my notebook. I will check it.
Okay. Okay. Ask
Mm,
them.
hold a minute. Let me check first where I wrote it. Okay. Okay. So my first question is if our order flow is bullish,
Hmm.
if London high is swept and Asia is also swept, should we automatically look for short in New York session or stay patient for longs? What you think about that question?
Yeah. So very good question. I'm trying to find some example of it. I think
Yeah,
we can operate on this one. So in this example, we can agree that institutional order flow is bullish, and we swept
yeah,
already the liquidity. Yes, and we had a retracement, but the key element is this liquidity because this is previous day high. So when the previous day high is not taken, I would still look for longs. However, if the previous day high is swept, is taken out, you shouldn't be looking for longs, and either for you can look for shorts, but you have to know that this will be harder move to catch because uh, you will be trading the retracement, or maybe this retracement will be the reversal, yeah, but it's still harder move to catch. It's easier to trade the distribution leg. And as the protocol says, we have institutional order flow (POI) and the drawn
yeah,
liquidity. So when the drawn
of course.
liquidity is taken, like you don't have a
Yeah.
trade basically.
Okay, so the other question is if drawn on liquidity is taken, where what we can expect from the market.
Yeah. So if the drawn liquidity is taken, we can expect uh, retrace or reversal, and we want to see SMT. So let's see if we have SMT here with ES on the hourly chart. Yes, we have SMT right there, as you can see. So what we can expect? We can expect retracement because how price moves have expansion, have
Yeah,
retracement, expansion, retracement.
yeah,
So these retracements
okay.
are not random.
Yeah.
These moves are not random. They are occurring
Why?
after certain uh, sequence of actions. So basically, like in this example, we expand, we retrace, expand, retrace. Boom, we
Okay.
expand, took this liquidity, create
Yeah.
SMT, and then we have
Okay.
another retrace. So yeah, I would, in case of looking retracement or reversal, I was I would like to have the high time frame liquidity sweep, preferably
Hmm.
with SMT.
I transfer mean 1 hour or
Yeah,
daily.
that even better. If this is previous day high or low, even better. But as you saw in this example, we swap out the PM, I think, highs of the previous day with SMT, and this is enough.
Mm.
This is enough for price to retrace. But what's important about this example, take a look that we just created the equal highs, and this
Yeah.
previous day high was left still. So we
So
just
why this
engineered. So,
previous?
yeah,
Yeah, okay, okay. I understand, but okay, the equal size are resting above, and the market reverts.
and market what?
Why the market taken equal high?
Why market want to take out equal highs?
Uh, yeah, that is I am answering question you that SMT was created in your chart.
Mhm.
There below. Yeah, this is the equal high. Yeah.
Yeah, this high and this one. Yeah,
Yeah.
yeah, this is equal
So,
highs. Mhm.
so yeah, equal high. The market reverse from almost 90%. We can say 95%. Yeah, yeah. This one.
From
You-
here, yeah.
From equal high. No, for the upper one. Yeah, this one. Market reverse and didn't take the equal high. My question is why?
Uh, yeah, why? Like what equal highs? Like this is high one.
Yeah, yeah. This one.
Yeah, both are taken out right there. Boom.
Uh,
I don't
okay.
understand, but what I
You
see.
didn't you didn't understand. Oh, you didn't understand. This is the equal high. Okay, market. In the market came almost taking equal high, but the market has not taken. My question is why it's taken, but before sell side, buy side, then
Here,
taken.
here.
Yeah, yeah.
So why we didn't took out these highs? Yeah, right in that leg. This is your question. So
Yeah,
why
there is the
we
right side.
why
Yeah.
this didn't take
Okay.
out this one? Yeah.
Yeah. This one. Yeah. This is my
Okay.
question.
Perfect. Okay. So I will tell you why. If the drawn liquidity is not taken out on any of the index, as you can
Mm.
see, this
Yeah.
liquidity is still on the yes. Price,
Yeah.
what will do? It will go in a very close proximity to it, and just in
Okay.
advance of taking it out, it will go lower to engineer buy side. So it will
Okay.
create two things: a fear in the retail-minded traders that now the
Yeah.
lower prices are next, and this is basically a trap.
Okay.
And the second thing, this this dump lower is creating what? Equal lows, because now we have this high and this one high. So
Mm.
this high. So
Yeah.
now they are in a close proximity to it. So this is equal highs.
Okay.
So
Okay.
this is
Okay.
this is very you have to really work on it, because this is like
Mm.
very often like check the Bitcoin. We're going lower, stopping just
Yeah.
before taking out
Yeah.
this. I think this is some some liquidity, yeah. And this is not a
Yeah.
random. This is not random. You have to know that the move higher, this move higher is a manipulation to
Mm-hmm.
then take this out. Basically, we are creating more liquidity, because weak traders are trying to long this because they see this weak.
Thank you, Lord.
Yeah, they think market is gonna reverse, but this is just engineering of sell side and creating the equal lows.
Okay, so my other question is, uh, what specific confirmation should I wait for New York before considering a short against bullish order flow?
Okay, so the question is, let's say order flow is bullish and you want to short the market. So you want to trade that move, yeah? And what are the confluences you need? So as I mentioned a lot of times, this is harder move to
Yeah,
catch. It's easier to play
yeah,
with the institutional order flow. However, I will tell you, first thing you need is a time-based liquidity. So let's take this Friday low.
okay,
This Friday low, if my eyes are not lying to me, is a previous week low. So
yes,
so this is time-based liquidity, very time-based liquidity, and if Nasdaq, I don't know how we're gonna open because the new week opening up can like create right there. But let's say this is random Tuesday, and we are going
yeah,
to take this previous week low. However, the ES is the slower index, and it will not take this out, so it will create the SMT with previous week low. This is very key sign that market will retrace or even reverse. One thing is very you can be confident about it. It will produce a move higher. So a sweep with SMT is a one thing. Second thing, on the lower time frame, of course, you look for the same confluences. So the macro or the time
okay,
CSD, uh, and then you can take a position.
yeah, okay,
Of course, also I didn't note here SMT. So it's important that
yeah,
one of the index is not taking this out. You can't trade the retracement if both of indexes will, oh my god, will take this previous week low. Understand?
yeah,
Yeah.
yeah, yeah. Both will take the previous week low. Then
Then there is no trade. There is no log.
there is
Okay.
no trade. Why?
Why? Because there is no SMT.
Okay, okay.
You have to have
There is no
SMT.
SMT.
Yeah.
Okay, 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 okay. So uh, that is fine. So uh, I want to ask you one other question.
Hmm.
That is, what time cycle do you recommend for clean model? For example, I mark 4 hour, I mark 1 hour, I mark every because there are too much distraction in my chart. The PDR is like distraction. I have to focus like 1 2 PDRs that are highly mm, that I can that is highly high probability order block or PDR is
Hmm.
okay. So I want to focus on few PDRs. What will you suggest? How can I identify the how can I find the PDR that shows strength from left side
Yeah.
of curve?
Yeah. Understand the question. So let's go back to Friday. So let's talk about the Friday delivery. It was around there, and let's see what my journal, what I posted in my journal. So I think
Mhm.
you can see the Discord. Yeah.
Yeah, I
Yeah.
see.
So as you can see, there is only one rectangle. There's only one box. I'm not marking
Yeah,
out more than two PDRs, and
yeah,
most
mm,
often it's
yeah,
ending
okay.
on the one. So so your question might be why this one? Mm, so now I will come back to
Mm,
the trading view. First of all, this is not a regular fair value gap because as you saw, it wasn't this, it wasn't this one,
yeah,
but it was
yeah.
combined. It was no sequence of these two.
Okay. Yes.
So basically, my tough process was simple. this fair value gap showed power right there.
Mm-hmm.
Okay, so it's important for me. But this fair value gap also show power right there. And
Yeah,
they are in a close proximity to each other. That's why
each other.
I just mark this out as a one PDRA, and this works
Okay.
perfectly. The next thing you need to look for is aligning this with liquidity, because mm, I was marking this out when this high was still not taken out on
Enter.
any of the indexes. So price is drawn drawn towards liquidity. So if you combine the PDRs with liquidity, you have higher chances to have a correct narrative, correct analysis. So that's what
Mm.
my tough process was. And the one thing I will tell you, if I would be wrong in that situation, let's say market is going higher. So the one thing now I know,
Yeah.
market is bullish, and I can play
Okay.
expansion, retracement expansion higher, or
Yeah.
I can trade the retracement from this high. So
Very
basically,
quickly.
yeah, we take the liquidity, as you should remember with SMT. So ES did
Very
not
simply.
take this out, and I can trade retracement uh, to this box, then to play long, or this retracement can be also reversal. So this is what my tough process is, but the main objective was this sequence of rival gaps, and I wanted price to sweep this high and go lower. I
Okay.
can tell you even more. Mm, so basically, as you already know, the fair value gaps that should power. But let's talk about this example. It says market structure shift on the hourly chart. Take a look. We have
All
low,
right.
we have high, we have low.
Mm.
Here is the intermediate term high. Then we have another high, and what is happening there? We have breaker formation.
Yes.
We have fair value gap that showed power, which is now inversed, so it's playing on our side. And the third thing
Yeah.
happened there, the creation of the new fair value gap that displays it through that intermediate term high. So this is the most probable uh,
Yeah.
CSD. Okay.
If our period is come overlap with each interval, so we can use that as strong period.
Yeah. Also, the first PDRA that was created on a leg lower. So let's take a look at this full leg lower that swept a lot of liquidity. The first value gap of this leg lower is this one. So this is
Yes.
also important. And take a look how I stopped in right there, go lower,
Okay.
inverse.
Always it is important, or sometime
Can you repeat?
always the first PDRA in swing high and swing low is
Yeah,
important. For example,
yeah,
or sometime it's important.
yeah. I have full video about it. I will link you this one because I
Okay.
was exactly talking about this example. Where is the
Okay.
uh, you didn't watch this, I think, because you should know. But I
Yeah, I
will.
didn't watch because I was busy for this one.
Yeah. We're working. We don't have time. I understand this. Yeah, this is this video. So mm
Okay.
I will link you this, and also I will tell
Oh,
you something.
please.
You
Okay.
after the
Okay.
meeting, I want you to watch this, but listen to me now. What you want to see is analyze the previous swing high. So where the previous swing high, in case we are bullish, stopped. So this swing high stopped right there. What you want to do now is find the PDRA that stopped out this move. So
Yes, yes,
let's
yeah,
go to the left side of the
exactly.
curve and find
I
it.
have to.
So
Yeah.
what stopped out this move was this Ferrari gap. What you not now
Okay.
know, after inversion, you want to position
Very
yourself
yes.
inside of this Ferrari gap
Okay.
to go higher.
Yeah.
This is
Yes.
the best way to navigate the order flow to
Great.
have correct
Mm.
narrative. So this is gold. This is called knowledge.
Yeah, yeah, yeah.
Take a
Okay.
black line and extend it to the right. Take a look. This
Right side.
this swing high was created right there. Let's extend it to the right. Can you see?
Mm. Yes, yes. I
Aligning
can
with the
see.
PDRA. Isn't it beautiful?
Yeah, yeah, it's very beautiful. Yeah, it's working. Strong. Reaction from PTI.
Yeah, yeah. So this is my answer. Also, watch the full video about it. You will be amazed.
Yeah. I
Also,
I
before I'm
understand. Yeah,
going
yeah,
to
I
let you
understand.
speak, take a look at this law and
Yeah.
extend it to the right. Can you see this? Also, what stopped
Yeah.
out this law? This Polish order
That.
block. So now extend this order block to the right. After inversion, this is your POE.
Okay, okay. Now I understand because before I was doing with the other way. So it's amazing. It's good.
Good. You know,
Okay.
Adnan, I want you to send me as much as you can. I know your time is limited, but you have to send me your analysis
Yeah.
before the session. I want to see how you view the price, how you view the markets. Okay?
Okay. 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 From now, daily, I will send you analysis before opening bell.
Yeah, beautiful. It will be amazing.
Okay. Okay. So it's good. Lot of doubts are clear. Let me check the other if I have
Yeah,
noted.
of course.
Okay, if you have to, okay, if you had to trade only one model using time cycle and limited number of PDRs, what would that model be?
Okay, so if I would have only one model, I would try this. Ex- Expansion,
Hello?
retracement,
Okay.
expansion. So where we have a lot of phases of price. We have accumulation, we have expansion, we
Yeah.
have retrace, we have retracement, we have reversal. Sorry. So what I would trade is the expansion followed by retracement followed by expansion, and I will tell you even in from which PDRA. So basically, the new PDRAs have the best chance to work. So what I will look for is a significant move lower, which confirms bearish institutional order flow. Then I would see if this move lower creates any new fair value gap,
Mm.
and after
Yeah.
this fair value gap is created, I want price to retrace to this to create a left side of the curve and manipulation, and from that I would play the expansion. So the expansion is my trade, and this is the best, the easiest model is existing. And take a look at this example. we have expansion, we have retracement.
Best case scenario, yeah.
So this is my trade. Of course, we can fractalize this
Oh,
because this is like the bigger move. But let's zoom in. What can you see here? We have expansion. What is created right there? Can you see this?
this is the inversion.
Fair value
Yeah,
gaps.
yeah,
So exactly what I said
yeah.
3 minutes ago. We have expansion, and the new fair value gap is created.
Expansion.
Yeah, the new fair value gap
Routine.
is created. We have retracement, and then we have expansion. So this is my trade. This is my forever model.
So,
Yeah.
o- okay, if there is a there is fair value gap, if in this leg contain two or three fair value gap, which will you take?
Can you repeat? Which what?
Okay, that that one that leg create a
Yeah.
fair value gap. Okay,
Yeah. Yeah.
the,
Yeah.
that
That's
you
right.
mark. If it create two or three PDRs, which will you took for your,
So okay, good question.
for example,
So in this example, it created first and the second.
yeah,
So what would I take
yeah,
this instead of this? So let's take a primo and discount and take a look that the premium is here.
okay,
So here's the premium, and I want price to return the premium. So this fair value gap is not in the premium; it's still in discount. That's why I'm not counting this fair value gap as the
yeah,
highest probability price to go lower. The second thing is this low aligning with this fair value gap. So the previous day low, the time-based
okay,
liquidity that we displaced through and we created this fair value gap is very important for me.
okay, I understand. If premium, let's suppose if a premium has two or three PDRs, so what will be your scenario to take? Which
Oh,
one?
I like to work on examples, but I don't know if I will find. So
Yeah,
let's say it's free of fair value gaps in a premium. So analyze which one showed the most power in the
okay,
past. Second thing, look if we displaced through time-based liquidity in a creation of that fair value gap. So it's exactly what I'm marking here. We created that gap in a displacement of, we displaced through that low and created fair value gap. So let's assume that here is the another fair value gap. Let's just pretend, okay? Let's pretend that we have fair value
okay,
gap 1,
okay,
fair value gap 2, and fair value gap 3. So why I'm
okay,
taking this one, this red one, is the following. It's aligning with the previous day low. Okay?
yes,
Yeah, this is very
okay,
important. So also it can be like a reason because it showed power. Okay? But basically, coming back to the
yeah,
premium and discount, you don't want a deep premium.
yes,
You want a premium in a close proximity to the 50%. Okay, you understand?
50%.
Yeah,
Understand? Yes, yes.
because I will
Okay,
tell you
good.
something. I don't want price to revert that high because this is already
Yeah,
different structure. It's CSD. I am looking for longs here. If price comes back like that, ignores everything. So I want price just to go
yeah,
a little above the 50% and
okay,
slam lower.
Okay, okay, I understand. So that's fine. Uh, so the premium and discount, for example, if we are marking in 1 hour premium and discount, okay. So and we are also marking in 15-minute premium and discount. There will be confusion. Am I right?
It depends what is your higher time frame because I'm marking out the premium discount on the hourly chart because I'm looking for the PTRS
Yeah.
on the hourly chart, and here is my analysis for the my narrative is being created. My higher time frame narrative is being created on the hourly chart. But if you're maybe scalper, if you play the smaller moves, yes,
Yeah.
you can take this
Okay.
move on the 15-second chart, and here is your premium. You know,
Yeah, yeah.
this is
But
also
as
right.
day trader, yeah, okay, okay. Continue.
This is
Sorry.
also right because time is fractal. So basically, you can mark out a premium discount on the daily chart, but even on the 5 minute chart.
Mm,
You know, so everything is based on your style. Because I will tell you
yes,
before I
yes.
will let you talk. Sorry, but I like to uh, tell you everything I know because the funny thing is I'm marking out the premium discount even on the 1 minute forming an entry, and I will show you
Yes.
example of it. Let me find it. It was beautiful, yeah, beautiful Tuesday. So basically, the CSD occurs right there. We have inversion of value gap.
Mm, yeah.
So this is my first entry, but
Yeah.
take a premium discount of the first leg higher. So this is a first leg higher,
Mhm.
and what can we see?
Mm,
We have retracement to the 50%, so the discount. So as you can see, premium discount works on the daily, on the 4 hour, on the hourly, on the 50 minutes, on the 1 minute, on the everything. Okay, because market is fractal.
mhm.
So here is the my personal mm, entry pyramidation. I like to pyramid in that way. So the come back to the 50%. Take a look how we close above it, and only wicks are there, and this is your next entry after the
Yeah,
first leg that
I'm
created CSDF.
Yeah, I am marking in lower time frame in same way when price displays. So I mark in 5 minutes and check 50% and take entry. Is it right?
Yeah, is it right? So
Because you
basically,
have
it's a lot of
okay.
function of premium discount. You can look for the narrative using the premium discount on
Yeah.
the hourly chart. So basically, your POI, your point of interest, yes. But also you can find an entry spot on the lower time frame using premium discount. Understand?
Yeah.
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 So this is a clue.
Okay. Okay. Understand.
Yeah.
So let me check. Okay, it's fine. Yeah, I understand that you explain.
Mm-hmm.
I understand you. Um, Okay, so when you analyze liquidity, what is your first thing you look how you on chart?
On the liquidity,
Which
yeah.
which yeah, which liquidity pools matter the most to you? Equal highs, session highs,
Mm-hmm.
or higher time frame
Yeah.
trends?
Understand.
How
So
how important? Yeah,
yeah. So
yeah, okay.
as you know, time-based liquidity. So the first thing I'm looking for is the previous. Let's say I'm bearish. So my drawn liquidity is previous day low, but I'm also marking out the previous day high because we can sweep out the previous day high and uh, patch and revert to the previous day low. So the previous day low,
Mm.
previous day high for sure, but also I'm looking if we didn't stop in advance of it. I remember some good example. I'm not prepared, but okay, we are lucky. I find it.
Okay.
Take a look at this. So I remember this day as it was yesterday, but it was like 2 weeks ago almost. So coming back to a Monday, so this day, coming back, I was looking at the chart, and what I noticed is at the Friday, you see the
Mm-hmm.
swing.
Yes.
Yeah, I was telling you about this in the beginning. What can you see here?
Here is reversal. It didn't take out
Yeah,
that.
yeah, yeah, exactly. We closed in a close.
Yeah.
We reverted in advance of taking this out. So price reverted in a
Mm.
close
Yes.
proximity to it. So this I like it. I like this. So we go. This is very close, but suddenly,
Yes. Yes.
boom, going lower. So what will create? Equal highs. So going to the Monday analysis, I was
Yeah.
sure that these highs will be taken out. And this is
Taken.
my
Okay.
drawn liquidity. And I know this drawn liquidity will be taken out. Also, the next thing I like to look for, now it's time for 1 minute, because it was, I think, on a Friday. On a Friday, it might
Yeah.
be on the Friday. So we had this is Friday. I am on the replay mode. No, that's not. Yeah. So basically, the news liquidity. So we had news release on the at 8:30. We have CPI, PPI. I don't know. It was news. Okay. So this is data
Okay. Okay.
low, news low. This is also very key liquidity. You know,
Okay.
basically what happened there. News release is right there. News down to price lower, created a week, and this
Mm.
is very key algorithmic liquidity.
Okay. Okay. Okay.
So as you can see,
Okay.
there is liquidity on the 1 minute that you want to see. So basically, the also the previous cycle lows. It was previous cycle low, very important, and also the data low, so the news low. Understand?
Yeah. 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 I understand. Completely understand.
Yeah, amazing.
Okay. Mm. Okay. So all clear.
All clear.
All clear.
Okay, you are
Yeah.
satisfied with the meeting?
I am very satisfied.
Amazing.